Now, let's cover another concept, which is about imbalance. And this will help you a little bit understanding where the market could go. But keep in mind, please keep in mind that the most important concepts are: one, market structure; two, supply market structure with the direction of the market. So if you use moving averages, it is okay. And two,
okay, the high, higher, low, lower, low, lower, high, that one, right?
yes, and you can use also moving averages.
Okay.
Now,
okay, perfect.
The other concept which is very important is supply and demand levels, and this is so market structure, direction, and supply and demand levels are the most important concepts. Okay. Third concept was Fibonacci levels. Now the fourth one, which is important but not as important as the other ones, please never forget, the most important concepts are the one that we covered so far. Now we're just adding some confirmations and some things that we can notice. This concept is called imbalance. Okay.
Imbalance. Okay.
Which basically means that the price is not balanced, basically. This happens not always, just few times. I mean, just in few cases. And it happens when the market is moving only in one direction very, very fast. Let's take an example.
Would the FOMC last week be an example?
Right, but also in other cases. Let me show you some examples. Okay, so here the price is not balanced, okay? Because there is no balance between buyers and sellers. There are only sellers, okay? Here the price is not balanced because there are only buyers, okay?
Okay.
And it is going only one way. Here, the price is balanced. Here you have balance because the price is moving in a range and it is covering the imbalances. For example, let me put another color so it is more clear and you don't confuse them with, okay, perfect. For example, here, this area right here was an imbalance and we came back to fill it, okay? Here, this area was an imbalance and we came back to fill the imbalance later, okay? Here, this area was an imbalance and we came back to fill it here, okay? Now, how to find imbalance areas? So you basically need to look at these big moves that are only going in one direction, and you need to look at the previous candle and the candle after. So this is the previous candle and this is the candle after, okay? And basically all the space between the wick and the wick is the imbalance area. So let me show you. Basically from here, okay, to here, this is all imbalanced, okay?
Okay.
Let me go back. This is all imbalanced. And right here, you can draw your imbalance area. If you want to. I usually don't draw them. I just see that they are over there. I don't need to draw them.
Okay. But they are like a little bit similar to like a supply and demand concept, right? They will come to retest or fill up the balance later.
No, I will tell you in a minute how to use them.
Okay.
So here we have our imbalance area. Now the candle after is filling a little bit of the imbalance and therefore we reduce it because there is less imbalance, but still there is imbalance because we didn't fill all of it. Okay. Now if we keep going, or right now we haven't filled the imbalance, but we could fill it in the future. Okay, this is left imbalanced. Now let's go to another example. like right here. Market moves and it's leaving behind imbalance areas. So this candle before and candle after is all imbalanced. Okay, from here to here, this body of the candle is all imbalanced. Okay. Here, this one is not imbalanced because it is covered by this wick. We come back to fill the imbalance, and if you can see, we close it perfectly from the wick to the wick. We close the imbalance. You see it? Do you see that? Do you see that?
Yeah, the wick covered.
Yes,
yeah, almost everything.
We are correct. Here we have imbalance. Later, we come back and fill the imbalance. Fill the imbalance, almost all of it. You see, from the wick to the wick, right here, we are filling the imbalance. Here, we basically fill all the imbalance and then we go up. Now, some things to, so you understand, you understand how imbalance is found, okay? Okay. Homework for next time, okay? So,
okay.
Because if I don't give you homework, there is no point of the lessons, because you need practice to understand the concepts. Otherwise, 5 pairs.
Okay.
You need to find 3 imbalances. Wait, 3 filled, 3 already filled imbalances per pair, and 3 unfilled imbalances per pair. And this becomes, so basically you need to find 15 filled imbalances and 15 unfilled imbalances, okay?
Okay. No problem.
Okay, this is very important because we're here, to teach you, and therefore this needs to be done.
Okay.
Okay, so for example, here we're leaving behind some other imbalance from here to here. This is another imbalance area.
The imbalance on the 25th is filled already, right?
Imbalance on the 25th. This one?
Is filled, right?
Yes, this move filled the imbalance.
Okay, just to confirm. Thank you.
Yes. And here the same. Here we had imbalance. Right here we had the imbalance, and we came back to fill it. Fill the imbalance right here, as you can see.
Okay.
Therefore, this is filled, and we are leaving behind. You see on this move to the downside, we're leaving behind some new imbalance. Let me show you. Imbalance right here. You see from the wick to the wick. Imbalance right here from the wick to the wick and the body of the candle. Imbalance right here from the wick to the wick. These are all imbalance areas. And look, filled all of them. Okay, filled. Now, this move is leaving behind some new imbalances.
But is it possible, right, for you to short this move, this big move down? Is it possible to spot, the short entry down to this big imbalances?
No, because we didn't have these imbalances yet. We created the imbalances with the move to the downside.
Yeah, correct. But at that time, it's impossible to expect these few imbalances, right?
We cannot predict that we will create imbalance.
Okay.
Nothing is predictable in Forex. We just need to look, understand what is happening, and then react based on what is happening.
Okay.
Come back and feel it. Okay. As you can see, we're feeling every single time the imbalance. Now, this is leading us to the next point. Not every time we will feel imbalance right away. Okay. The problem with a lot of people trading imbalance areas is that they see the imbalance. Let me go back. They see the imbalance right here. For example, okay, or right here also we have imbalance. And they will start buying and buying and buying because they think that we need to fill the imbalance. And then what happens is just that we keep going down and they end up in a huge loss just because there was imbalance. It is not predictable when we will come back to fill the imbalance. As you saw right here, all the way back here, we had an imbalance here. And we didn't feel it until like months after, 2 months after, okay? So it is not the way in which you don't trade imbalance is, oh, we have an imbalance and therefore I will enter buys because we're coming back to that imbalance. No, this is not what we will do, okay?
Okay. Oh, there are people doing that.
Yeah, of course, there are people doing it. Now, what we will do is find the direction of the market. In this case, here we had the breakout structure. Direction is bearish, at least in 4 hours is bearish. We see that there is imbalance right here, imbalance right here, imbalance right here. And we are not going to buy to cover these imbalances because it is not predictable that we will come back to fill them right away. We can just go down. What we want to do is find a supply area which is close to the imbalances. Here we have supply. Supply area, small candles before the big push. The big push is leaving behind imbalances. The big push is breaking the structure of the market. We are turning bearish, breaking the structure. If you want to, we are also breaking the trend line. Well, I don't really use it that much, but okay, we're breaking the trend line, breaking the structure of the market, previous low broken, imbalances that need to be filled, order block on the 4 hours, higher time frame order block right here. Of course, you can refine it on lower time frames, but that's another thing that we will talk about in the future.
Okay. So if it goes back to the 50% of the order block, it will be a good chance to short it again.
Yes, even at the start of we either want to sell at the beginning of the order block or 50%. Now, let me tell you. So I was saying all of this stuff because there is people that are buying just because they think that price needs to fill that imbalance, which is true. The price needs to fill that imbalance, but not necessarily right away. It can happen after months, after years, or maybe after 2 minutes. Okay, we don't know. We don't know. So we're not buying. We're not. Again, all my course is not based on predicting. Well, in some way, of course, we are predicting, but it is not based on just guessing where we will go. It is based on seeing the evidence, and this is the evidence right here: breakout structure, imbalance left behind, order block on the 4 hours. Then we wait. Price comes back, filling some imbalances, fills the imbalance. And in this case, let me see. Okay, in this case, not trade for us. Okay, not trade for us in this case. What I wanted to see was a fill of the imbalance, and after filling the imbalance, touching the order block and continuing to the downside. Now, this didn't happen. This didn't happen, and therefore, not trade for us. In this case, it would be a missed trade. Now, let me show you a trade that we would have entered. It is back here. I was showing you the imbalance areas. So, okay. So here we're waiting. Of course, we're leaving behind this imbalance. Well, I'll just put this one, this color right now. Anyway, this is imbalanced, leaving behind it. Also, where we have this order block, higher time frame order block, as you can see, last down candle before the big move to the upside. But we're not looking for buying yet because we haven't broken the previous structure. We are bullish, yes, we are in an uptrend, we're bullish, but we haven't broken the previous structure. We wait here, break of structure. Okay, break of structure right here. Coming back, filling the imbalance, and also after filling the imbalance, we go inside the order block, and this is an opportunity to buy. Okay.
Okay. You will buy at the weak area, right? Ah.
No, of course,
Would you
yes.
buy
We buy right here. Then we went. This was like a. Let me see how many pips. It was like 100 pips move, I believe. 150 pips to the upside. And yeah, now it all comes down to, you know, entering with a good stop loss in order to have a good risk to reward ratio. But this is covered. This we will cover this in other lessons. We cover it in the course with the 1 minute strategy. We will cover it in the lessons right here in depth. No worries. But the whole point is find the direction, find the imbalance areas, find the order block, and then don't go against it just because you think that we will feel that imbalance right away. Sometimes it will work, many times it will not, because you don't know when we will stop in order to come back to fill it. We don't know that we will stop right here to come back to fill it. We can go down 1,000 pips more, okay? So you find your areas of imbalance, you find your order block. First of all, before all of this, you find your direction, and yeah, pretty much it. Okay.